Ladies and gentlemen, I want to ask you a simple but crucial question today. How many ounces of silver are you holding right now? Because if you don't have enough, you are gambling with your financial future. The truth is, we live in a world where governments and central banks are printing money at a pace that's completely unsustainable. Your dollars, euros, or any paper currency won't hold their value. But silver is real money, and the clock is ticking. You need to understand one simple truth. Money that can be printed at will is not real money. The dollars in your pocket, the euros in your bank account, or any government-issued currency is nothing more than a promise. A piece of paper whose value is being steadily eroded by inflation and reckless monetary policy. Every time a central bank announces more quantitative easing, every time the government prints billions to fund deficits, your purchasing power takes a hit. The average person fails to see this because inflation doesn't always show up immediately in the things they buy, but over time it adds up, silently stealing from your wealth. That's why holding real tangible assets has never been more important. Among those, silver stands out not just as a commodity, but as a true store of wealth. Silver has been a medium of exchange for thousands of years. Its value is not dictated by government decree or balance sheets. It is determined by supply, demand, and the intrinsic utility it provides. Unlike paper assets, silver cannot be created by keystrokes on a computer. There's a finite amount in the earth, and mining new silver is increasingly difficult and expensive. That scarcity, combined with steadily rising industrial demand, makes silver an asset that is naturally protected against the corrosive effects of inflation. When paper money loses value, silver retains it because it is real wealth. The first point to grasp is that silver is undervalued relative to its historical ratios and to gold. Over the past century, the silver to gold ratio has averaged around 5:31. Today it sits far above that, meaning silver is cheap not just relative to its historical price, but also compared to gold, which is itself undervalued in terms of real money. What this tells us is simple. Silver has room to rise dramatically without even considering the effect of a broader currency collapse, and yet few people pay attention. Most investors are comfortable sitting in stocks, bonds, and cash, assuming they are safe. But what happens when inflation erodes the value of their income, or when the central bank's policies create asset bubbles that inevitably burst? Suddenly the wealth they thought was secure is gone. Silver, however, remains. Silver isn't just a hedge, it's an insurance policy. It protects you against the failure of fiat currency systems. Every ounce you hold represents a claim on real value, a tangible asset that can't be devalued at the whim of politicians or central bankers. During periods of monetary instability, silver behaves in ways that stocks and bonds cannot. While paper assets fluctuate wildly, silver acts as a stabilizer, preserving wealth and buying power when it is needed most. History has shown this time and again. In times of crisis, silver is in demand, and those who hold it are not left scrambling to protect themselves. But the case for silver is not just defensive, it is also proactive. There is an industrial demand for silver that is growing every year. Electronics, solar panels, medical devices all require silver. Unlike gold, which is primarily held for investment in jewelry, silver has practical applications that underpin its intrinsic value. This dual role as both a precious metal and an industrial commodity gives it a unique position in wealth preservation. Its price may be suppressed temporarily by speculative markets or financial manipulations, but ultimately supply and demand fundamentals drive its value upward. Those who recognize this early and who accumulate silver consistently stand to benefit not only from its protective qualities, but also from its potential for significant capital appreciation. Timing is critical. The longer you wait, the more vulnerable you are to the decline of fiat currencies. Inflation compounds over time. Governments continue to spend without restraint, and central banks continue to print. Every day you delay investing in real assets like silver, the more your wealth is eroded. Holding paper money while waiting for the right moment is a mistake. There is no perfect time to act. Action itself is protection. Even modest accumulation now can secure your financial future far more effectively than relying on savings accounts, bonds, or stock portfolios that are exposed to systemic risks. Consider what silver represents psychologically. It is not just a metal, it is a symbol of financial prudence. In a world where wealth can disappear overnight due to inflation, debt crisis, or currency devaluation, having a tangible, historically recognized store of value provides not only security but peace of mind. Can't eat paper money, and you can't wear bonds, but silver, with its physical presence and enduring worth, can always be converted into goods, services, or other forms of wealth. It's real, measurable, and immune to the arbitrary decisions of central planners. We live in a time when the average investor is blinded by the illusion of wealth. They see rising stock markets and assume stability, ignoring the underlying fragility of the system. When the crisis comes, and it will come, these paper assets will fail to protect them. Those who hold silver, however, will have a shield ever. Way-outs represents a decision to preserve purchasing power, to fight back against financial recklessness, and to ensure that personal wealth is not merely a number on a screen, but a tangible, enduring reality. Silver is not a gamble. It is a necessity. It is the wealth-preserving asset that history has validated time and again. If you want to secure your future, to protect your savings, and to stand strong against the erosion of currency, silver is not optional. It is essential. Accumulating it now, understanding its value, and holding it long-term is the most rational decision any prudent investor can make. We need to start with the reality that most investors are completely blind to silver is massively undervalued. If you look at the world today, at the prices you can buy silver for, and compare it to its historical ratios, industrial demand, and real scarcity, it becomes obvious that the market is ignoring something fundamental. People treat silver like a minor commodity, a secondary investment, something nice to have. But the truth is, it is one of the most important wealth preservation tools available. And it is being sold at a fraction of its true value. Over the last 100 years, silver has held a unique position in the monetary system. It wasn't just a commodity, it was money. And money has intrinsic value that can't be created by a central bank at will. Today, silver's price has little to do with its historical purchasing power and almost nothing to do with its scarcity. Governments and central banks manipulate markets, and paper derivatives mask the true supply and demand, but the underlying reality is unavoidable. Silver is cheap. It is far cheaper than it should be relative to gold, far cheaper than it should be relative to inflation, and far cheaper than it is relative to the industrial value it provides. Let's talk about gold for a moment. Gold is widely recognized as money, and it has been a hedge against currency debasement for centuries. But silver, which has similar properties and has been used as money for millennia, trades at a fraction of gold's value. Historically, the silver to gold ratio has averaged around 50 to 1. Today, that ratio is much higher, meaning silver is dramatically undervalued relative to gold. And it's not just ratios on paper. When you look at the fundamentals, the picture becomes even clearer. Silver is used in electronics, solar panels, medical equipment, and a host of industrial applications that cannot be replaced. Supply is constrained. Mining is expensive, and yet the price remains depressed because the market is being manipulated by paper contracts and speculative trading. The undervaluation is not just relative, it's absolute. If you adjust silver's price for inflation, for purchasing power, and for its historical monetary role, it is absurdly cheap. In real terms, silver is trading at levels we haven't seen for decades. Meanwhile, the world continues to produce debt at unprecedented rates. Governments are printing money with no concern for long-term consequences. Fiat currencies are losing value. Inflation is silently eroding the purchasing power of savings. And what do most investors do? They hold cash thinking it's safe. They hold bonds thinking they'll be protected. But all they're doing is betting on a system that is inherently fragile and increasingly unstable. Silver, the undervalued metal, is the asset that will protect them when the system inevitably falters. Part of the reason silver remains undervalued is psychological. Investors tend to focus on gold because it's well known, widely publicized, and often discussed in financial media. Silver is overlooked because it is perceived as less glamorous, more volatile, and primarily an industrial metal, but volatility is precisely why it is undervalued. The market underestimates its long-term value because short-term traders treat it like a commodity to speculate on rather than a store of wealth to hold. They fail to see that every ounce of silver represents real tangible value that cannot be created from nothing. Unlike paper assets or fiat currency, industrial demand is another factor. Silver is essential in modern technology, and the demand is rising steadily, yet the price does not reflect that demand. This is a disconnect the market has ignored for years. The mining supply of silver cannot easily expand to meet demand because it is costly, slow, and limited by geological constraints. When supply is fixed and demand rises, prices must eventually adjust. This isn't theory, it's basic economics, and when that adjustment comes, the undervaluation we see today will be corrected potentially by multiples of the current price. Another aspect of undervalued awareness among the public, most people don't understand what silver really is. They see it in jewelry or coins and dismiss it as a minor investment. They don't see it as a hedge against the collapse of paper currency, but that's exactly why it is undervalued. The market is full of people who have no idea how valuable silver really is when recognition comes, and the price will surge. Those who own it before that recognition will reap the rewards. Those who wait will pay far more than the current depressed prices. This undervaluation is not permanent. History has shown time and again that markets eventually correct extreme mispricings. Silver has been undervalued before, and when the disconnect between reality and market perception becomes too great, the market adjusts violently. The undervaluation of silver is a temporary anomaly caused by manipulation, ignorance, and short-term thinking, but it will not last forever. Those who understand its true worth, those who act now to accumulate and hold, are positioning themselves to benefit enormously. In short, silver is cheap, overlooked, and misunderstood. Its value is anchored in its scarcity, its industrial use, and its history as money. The current market price is not an accurate reflection of these fundamentals. It is undervalued in every conceivable way relative to gold, relative to inflation, relative to industrial demand, and relative to its intrinsic worth as a tangible, enduring asset. Anyone who recognizes this, anyone who takes action to accumulate silver today, is making a rational decision to protect and grow their wealth while others are blinded by the illusions of paper money. You need to understand that wealth is not created overnight. It is preserved and built over time through careful decisions and strategic actions. When it comes to silver, timing and accumulation are everything. This isn't a market where you want to buy in a panic, nor is it one where waiting for the perfect price is a rational strategy. Silver is undervalued, that much is clear, but recognizing its value is only half the battle. The other half is how you accumulate it and when you choose to act. The decisions you make now will determine whether you preserve your wealth or watch it erode. In real terms, accumulating silver is not about buying a single ounce here or there at random. It is about having a plan. You need to assess how much of your total wealth you are willing to dedicate to an asset that is undervalued and has the potential for significant appreciation. The truth is, most investors are underexposed to precious metals. They assume that stocks and bonds will protect them, but when currency debasement accelerates, those assets often fail. By strategically accumulating silver, you are creating a foundation for financial assets, security that is insulated from the failures of fiat currency. The key is consistency. You don't have to buy everything at once. In fact, trying to time the absolute bottom is a trap that leads to inaction. Markets rarely allow you to pick perfect entry points. Instead, you accumulate silver over time using dollar cost averaging, buying small amounts consistently, regardless of short-term price fluctuations. This method ensures that you are steadily building your position, reducing risk, and taking advantage of low prices when they appear. Every ounce you acquire is an insurance policy against inflation, economic instability, and currency devaluation. Timing is not about predicting short-term market swings. It's about recognizing the broader economic reality. Governments continue to spend recklessly, central banks continue to print money, and debt levels are rising to unsustainable heights. This is not speculation, it is fact. In this environment, silver becomes increasingly valuable over time. The sooner you begin accumulating it, the more you benefit from the inevitable increase in demand and the correction of its current undervaluation. Waiting for a perfect moment only increases your exposure to the erosion of purchasing power. Action now is protection. There is also a psychological advantage to strategic accumulation. By committing to a plan and building a position consistently, you remove the stress of trying to time the market and avoid making emotional decisions. Many investors buy high out of fear of missing out or sell low out of panic when the market fluctuates. Silver, when accumulated strategically, forces discipline. Each purchase is a deliberate step towards securing your financial future. Over time, these ounces add up, creating a substantial hedge against economic uncertainty. Another important element is understanding your risk tolerance. Strategic accumulation does not mean overextending yourself. It means allocating a portion of your wealth that balances growth potential with safety. Silver is undervalued, but it is still subject to short-term price swings. You must be prepared for volatility, not panic in the face of it. Volatility is not the enemy. It is part of the market mechanism that allows you to accumulate at attractive prices. By approaching silver with a long-term perspective, you turn these fluctuations into opportunities rather than threats. Consider also the external factors that make timing critical. Silver is a physical asset, and physical supply is limited. Mining cannot instantly increase to meet demand, and industrial usage continues to rise. When recognition of silver's true value spreads, and it inevitably supply will struggle to keep pace, those who have accumulated strategically will be in a position to benefit, while those waiting will face higher prices and limited availability. Accumulation now in measured amounts ensures that you are not left scrambling when the market finally corrects itself. Strategic accumulation is also about diversification within your holdings. Not all silver needs to be held in the same form. Coins, bars, and allocated accounts each have different advantages, from liquidity to security. By diversifying the ways you hold silver, you maximize accessibility while minimizing risk. You also position yourself to take advantage of different market dynamics, whether it's a spike in demand for physical coins or increased institutional interest in allocated holdings. Finally, remember that accumulation is about foresight, not speculation. The broader economic system is unstable, inflation is persistent, currencies are being devalued, debt levels are unsustainable. These are not hypotheticals, they are ongoing realities. By strategically accumulating silver, you are not gambling on market trends. You are proactively protecting your wealth against forces that are largely outside your control. Every ounce you hold represents a step toward financial security, a hedge against inflation, and a tangible claim on real value that cannot be created or destroyed